12 Charlie Munger frugal living habits you need to know. Charlie Munger is one of the most successful investors of all time. He's also known for his frugal lifestyle. Hello guys and welcome back to the channel. In this video we'll share 12 frugal living habits that you can learn from Charlie Munger. On number 12, be wary of exotic financial products. Buffett and Munger have consistently criticized financial innovation in the form of derivatives, catastrophe bonds, cryptocurrencies, and other areas. This caution is evident in the way they manage Berkshire Hathaway. The firm maintains its balance sheet using a method that has inspired how Morningstar handles its own. Number 11 is the another argument in favor of moats is inflation. It has been simple to disregard inflation for around 40 years before 2022. However, everyone who has read Buffett's writings knows that throughout the 1970s and the early 1980s, he often discussed inflation. The challenge for firms, particularly those most susceptible to inflationary cost pressures, to achieve respectable returns for shareholders during a period of high inflation was what he stressed at the time. On number 10 is the volatility is not a risk. The first thing my old Morningstar employer ever said to me was, "Beta is nonsense," and she was a lover of Buffett and Munger. It is understandable that risk has taken up a big portion of Buffett and Munger time, given that issuing huge insurance policies is a major portion of Berkshire Hathaway's business. On number 9 is the integrity made simple. When he took over as CEO of Salomon Brothers in 1991, Buffett is credited as telling the staff, "Lose money for the business and I'll be understanding. It'll be harsh if the company loses even the slightest bit of repute." On number 8, we have fund boards are underdogs. That was Buffett's conclusion in his well-known letter to shareholders from 2002, and it definitely aligns with the data Morningstar has gathered over the years. Even independent fund directors seldom object to fund managers and hardly ever vote to oust the management, despite having a clear duty to act as guardians for fund shareholders. Number 7 is, it's okay to do nothing while investing. Buffett likened investing to waiting for a fat pitch, or a great straight ball down the middle of the plate in baseball. But with investing, unlike baseball, you are not out after 3 strikes. You are free to let as many pitches go by as you choose. On number 6, we have to continue to learn. Both Buffett and Munger are voracious readers, and Munger stresses the value of science, especially a grasp of evolution, as being fundamental to comprehending human motivations. Munger recommends several of my favorite works, including Guns, Germs, and Steel by Jared Diamond. Number 5 is the markets are decent, but not excellent. He began his professional career with a strong belief in the market's ability to make wise decisions, since he studied economics at the University of Chicago. Fortunately, his first employment was studying Japanese stocks at a time when the asset price bubble in Japan, possibly the worst in history, was about to implode. It was learned early on that markets may sometimes go crazy, or more specifically, that those who make up markets can occasionally go haywire and start to think that trees grow to the sky. Number 4 is the index funds are a fantastic development. Although it would seem that this contradicts the earlier statement regarding imperfect markets, it doesn't. Even if markets can go berserk, it is very difficult to outperform them. In terms of total fund assets, index funds made up a very small portion. The greatest approach for the majority of investors to obtain exposure to the stock market, according to Buffett, is via index funds, which he has constantly praised. Number 3 is neither have value nor growth makes a good investor. Buffett was notably persuaded by Munger to abandon Ben Graham's cigar butt approach to value investing, which involves seeking for equities with one decent puff left in them, and instead to embrace excellent firms, even if it meant paying more for them. The most important realization is that a company's value depends on its growth potential and how sure one may be that that growth will occur. Number 2 is what winning the birth lottery really means. The next 2 lessons apply to all of life, not simply the little portion of it that we spend investing. Buffett has stressed how fortunate he was to be born when he did and where he did. His slightly specialized abilities in business analysis would have been useless if he had been born in a different period and location. Number 1 is the secret of happiness. Not having brilliant children, a gorgeous spouse, or enjoyable conversations are the secrets to a good marriage. No, according to Buffett and Munger, selecting a partner with modest expectations is the secret to a good marriage. Well, that's all for today. In case you enjoyed today's video, kindly like and subscribe to the channel.